As far as evaluating risk appetite and suitability for clients, when you look at a platform like Waterloo and you say, okay, well, part of our platform is bringing alternative investments to those that are traditionally at the beginning or moderate phases of the registered investment advisory scale, right? So a lot of the clients that you guys are having probably an intake are between, let's say, $1 million and $10 million, right? And so a lot of those clients that will be coming into the fold at a platform like Waterloo might have their first exposure to alternative investments, at least in a regular investment way, when they come to a platform through, say, a strategic capital and come to a Waterloo platform. How do you guys look at risk appetite, and how do you evaluate that from a client by client basis as you intake those clients through a registered investment advisory?
Sure. So, the typical risk questionnaire that a lot of advisors use it kind of relies on this idea of max pain threshold, the idea of, how comfortable, you are with volatility. That type of risk questionnaire isn't necessarily appropriate when considering the nuanced aspects of a lot of alternative investment strategies, especially as it relates to illiquidity. So we have a specialized risk questionnaire that we use for our clients, which really helps us evaluate a client's comfort with, number one, investing in startup businesses. Private equity is inherently more risky than public stocks, for instance. So so we want to make sure our client has a certain comfort level with the type of risk that we might be taking in a strategy like this. Secondly, we need to understand how comfortable they are with illiquidity, right? And so as it relates to building out a plan for a client, we need to understand, are they a high earning individual that is socking a lot of money away into their retirement accounts? If they can withstand, some illiquid exposure in their portfolio, a lot of times we can target maybe a higher rate of return or more diversified, uncorrelated return stream. So it really is a collaborative process that we go through with our clients to make sure that, number one, they understand what they're investing in. We want to make sure our clients are fully educated in what we're recommending to them. And number two, that these types of investments are appropriate and actually fit within their overall portfolio construction.